How has sports morphed into one of the most compelling institutional-grade asset classes in the world? In 2011, the sports industry on a combined basis was worth about $500 billion. Today, we're looking at a $2.5 trillion industry. What once started as a passion project, a vanity project, an interesting project to own, has morphed now into an institutional-grade asset class that we are finding all over the world is attractive to investors. In the US, that asset class has compounded 13% annually for the last 60 years. It survived bull markets and bear markets on an uncorrelated basis. Sports has fundamentally changed because of new technologies and because of culture. There are more billionaires than there ever were before, and there are more ways to consume intellectual property than there ever were before. However, there are not a glut of new sports teams. What was once an entertainment venue that depended on sales of tickets, hot dogs, and beer, now has become what we see as a global real estate, multimedia, multi-sport ownership group, and oftentimes a global conglomerate. This is fueled by new media deals and the proliferation of media over various new channels, real estate opportunities such as plazas and mixed-use opportunities, the monetization of intellectual property of the teams and the leagues in a way that they never could before. It's not just naming rights and suite sponsorships, it's the global proliferation of the intellectual property across the world. In 2011, the average NBA valuation for a team was about $400 million. Going into 2026, an NBA franchise is valued at $5.5 billion. Now, because a single buyer is going to have a very hard time coming up with the liquidity to pay for a $5.5 billion asset, the leagues have loosened their rules. They've allowed private investment funds, pension funds, sovereign wealth funds, and increasingly consortiums of wealthy individuals that are coming together to support the control owner in acquiring the asset. As well, all of those institutions and entities and buyers need liquidity to make this work. So there are various lending options, hybrid securities, and all kinds of institutional and private capital sources that are funding the buyers and their consortiums. And behind them are lenders lending primarily to those institutions who are ultimately funding the buyers. I'm Matt Eisler, head of sports capital at Latham & Watkins. I've been advising on sports transactions for over 13 years, and I'm excited to help clients navigate one of the most compelling and rapidly institutionalizing sectors in the world.